Hello and welcome to Beyond the Pivot, the podcast where we bring you honest, unfiltered journeys from Africa's entrepreneurs and innovators.
I'm Kabwela Malupande, joined by my co-host Martin Vitek. Each episode, we dive deep into the realities of building and growing businesses on our continent. Let's get started. This is Beyond the Pivot. Hi, everybody. Welcome to the Beyond the Pivot podcast, the podcast that brings you insights and everything happening across the African continent around entrepreneurship, investments, and ecosystem building. We have quite an interesting guest today. That's Gaurav Vijayvargiya. He's the current CEO of 260 Brands. 260 Brands is a household name in Zambia and in other countries as well, where they have expanded to. And we're excited to hear about their story. It is a family business, so look forward to those insights about how Gaurav has taken over from his dad and how exactly they're building on what the future holds for 260 Brands. Gaurav, pleasure having you today on the Beyond the Pivot podcast.
Thank you, Kabwela. It's a pleasure all mine to be here. Thank you so much.
Perfect. Let's start out on a light note, right? If your life and career so far were a flavor of ice cream, what would it be and why?
Well, I personally like dark chocolate. So I'd say dark chocolate. And why? I think dark chocolate has depth. Dark chocolate, you don't really appreciate it until you're comfortable with it. Even though, it has complexity and even a little bit of bitterness. Maybe the relation to how we operate in emerging markets such as Zambia. So maybe dark chocolate.
I was thinking you'd say you're lactose intolerant, but I'm glad to know you're not, and you get to appreciate a good chocolate.
Fortunately not.
Okay.
No.
And so can you tell us, before we even get into the story of 260 Brands, who was Gaurav, the individual, before what you are today as a CEO of 260 Brands? And what did you think your life or career would look like before the current role that you have?
Sure. So raised in Zambia, Zambia national, and life was not as complicated growing up. It was not as ambiguous either in terms of what I would or would not do. Fast forward to high school, making a decision for what I wanted to pursue. I spent my last 2 years of high school basically as a national rally driver, and I was fortunate enough to have a mentor to spend some time at workshops. It was 4x4 rally, not the Subarus, but basically custom built 4x4 slow, difficult terrain rallies. But we'd spend the weekends in workshops. That sort of made me feel like I wanted to get into mechanical engineering. Did get admitted in mechanical engineering at Purdue University in the US. But 2 years into it, like most confused college kids, I felt that was not where my passion really lied. But fortunately, with all the classes and credits I'd taken, I had the opportunity to switch within the science field to a more management role, but within manufacturing still. So I switched over to pursuing a Bachelor of Science in Industrial Management with a minor in Operations and Supply Chain. And that got me into my first job in the US for a North American, or rather Swiss-listed company called Oerlikon, and spent time in their supply chain team between the US, India, China, Europe. And yeah, it was great working experience, working in a multi-billion-dollar listed corporation with various facets to supply chain. It gave me a lot of global exposure as well, which was great because the East and the West are substantially different in terms of culture, the ways of working. But yeah, that's basically how the journey started. And then by luck, I never planned to come back home, but for various reasons, ended up back home. And while working remotely as well, I got exposed to what my father was building and essentially thought, hey, it might be interesting to add some value here with a little bit of the world that I've seen to solve, problems and improve the status quo. So that's basically what got me into the business. As an individual, married with 2 beautiful girls and a beautiful wife. So very young with lots of interesting responsibilities and problems to solve. So fun times.
And is there something very specific? Because many people, just go through life and they don't take time to self-introspect, right? At the point that you were realizing mechanical engineering wasn't the thing for you and you're plugging yourself into these supply chain businesses, was there a particular thing that happened that made you have that realization?
I think more so than mechanical engineering, the interesting thing that happened that led me to, I guess, where I am today was we're seeing what the business was doing, right? I mean, it's not just about food and nutrition, but really about impact and affordable nutrition, solving problems that really matter to a wider range of people. And I think that's what got me in. So there was an aspect of food, there was an aspect of products, but there was more about there's more opportunity that made me feel like I could solve problems, having seen the world a little bit, and then taking some of those learnings into the family business, and of course contributing to our own GDP here in Zambia. So that's, I think, where the pivoting point came. I think during my first tenure working across multiple continents, it was just pure learning, pure growth. Taking on tough projects, challenges, environments, different office spaces and cultures. It was all about learning. So it's never about a goal per se, but enjoying the journey and experiencing different cultures at the same time.
Or is it because also for the thrill of the adrenaline rush from the motor rally is what drove you as well to business, because you want to be in the turbulence of the business space as well?
Maybe. I never thought to get into business, to be honest. I enjoyed working corporate America and lots of great people to interact with, more structure in terms of how you learn, how you operate. But I think the thrill which came through for the changeover was, I think, purpose, right? There's more purpose in terms of what we're doing and a lot more challenging and deeply more rewarding as well. So yeah, that thrill is what keeps the fire burning every day now as well. So.
And can you share maybe for those that don't know about 260 Brands, I have the privilege of knowing much about it and the products you offer. But can you share the founding story of the company and what was the original vision of the problem or vision that the company set out to solve? And how has the company's mission evolved over the years?
Sure. So founded founded in 1997, I think with a fairly simple objective at the time that was just, make affordable, nutritious foods which are locally produced. And the focus on maize and soy came from just understanding what people eat, what's locally available, which can be converted without having to worry about importing raw materials. And yeah, just respecting people's diets. I mean, when we look at one of our brands, Seva's Instant Togwa, it's derived from, that was also launched in 1997, that basically was derived from our traditional beverage, Togwa, right? Which has slightly different ingredients from what we actually use. Sorghum and millet blended with maize, and we replaced it with soy because that was locally available, has a protein content, and of course the viscosity in the product as well mimics Togwa as we see it in, traditional households in Zambia. So that's how it really started. And over the years, the business has evolved, from purely just a manufacturing-led business to being a little more purpose-led. And today we think of building, a food ecosystem and beverage ecosystem that is made from locally sourced ingredients, supporting communities where we can add value, and then tackling the aspect of nutrition as well as we go along. And of course, there's an aspect of innovation and pioneering into categories, which has been important for us over the years. We've been able to pioneer and venture into unknown spaces, leading to our most recent innovation with Zambia's first plant.
And when I look at your business, Gaurav, I can see you've deliberately focused. Of course, there are other products that speak to different customer segments, but a huge chunk of it has been targeted towards low and middle income communities, right? Which are often overlooked when people are thinking around starting a business or what customer segments we could look at. How have you managed to stay both relevant and profitable, having served such a market?
So I think rather than profitable, I'd say relevant and sustainable. And I think that's comes through focusing on what's locally available, right? So I think in business as well, you start thinking about what problem are you trying to solve and is it sustainable in the long run? So you're either close to source or close to market. So the thought process here is being close to source, being primarily in the agriculture space, which has made it easier to to tackle any sort of import challenges that certain economies may face if they're dependent on importing their raw materials, right? So that has allowed us to remain sustainable with very good policy and governance from the government of Zambia as well, which allows them to focus and prioritize the sector in agro-processing. So that has been very important and has allowed us to almost clock 30 years in Zambia.
And so when I look, I'm curious, when I look now to the new products, because I've looked at the organic soy strips, for example, packaged differently. And I think you're targeting a whole new market. Correct me if I'm wrong. I think your soy strips were among the top 10 plant-based protein. I think sold on Amazon. I think I could be wrong, but I think you were shipping product to the US. Were you part of that as you were stepping into the business? Just curious to know.
Sure. Yeah. No. Well, I led it. I led the aspect of exporting a proudly Zambian manufactured product and brand into the US. We were actually awarded through the association in 2021 as the first proudly Zambian brand that is actually exported into the US. So very proud of that. And I guess having an understanding of the US market a little bit with my own personal previous professional network, that sort of helped us to get to that sort of milestone. But yeah, we're not even part of the top 10. I mean, we were ranked number 1 as Amazon's choice within the strips and crumbles category. So very proud of that. And, the entire team that worked tirelessly to get there, from our partners in the US and of course our local teams making these nutritious products. So yeah, that was manufactured for the strips. I mean, so in Zambia, we call it chunks, right? As you probably know, but in the US, you put chunks on the packet, or even soy pieces for that matter, people wouldn't understand. So we had to take the same products and just pack it to make it relevant to an American consumer, and replace chunks with strips and mince with crumbles. Yeah.
And I think there's a lesson there, and I think it speaks to the change in 260 Brands, which is you started out with this particular customer segment, and now you're looking to open up to more other high-end customer segments, right? What drove that particular decision for you to start looking at other customer segments? Because we have entrepreneurs that could be stuck offering one product, but is there anything from a strategic point of view that led you to that path?
So I think when we talk about the brand and the categories that we operate in, it's not a deliberate focus to a higher income class bracket for that matter, but it's more about, are we able to provide a locally manufactured alternative to what is being imported, and at the same time make it affordable, right? So we're very proud today that, I think you're probably referring to Nutrimilk, where you think that we're targeting a upper class market, and the contrary, actually, it's different. I believe we're the only brand on the continent, on the African continent, that is allowing consumers to buy a dairy milk alternative, which is cheaper than dairy. And that's where the product's innovation comes in the entire life cycle from farm to shelf. So focusing, I think, on the segment was not as relevant in this case, but rather to solve a problem by what we can locally manufacture. But yes, we invested in innovation to make it more premium. You have your organic certifications that allow for more health conscious consumers to appreciate these products and brands.
And what are you looking at when you're thinking around introducing new products in the market? Like, what does the process for research look like currently with your team?
So I think at this stage, it's really about, are we able, the first thing, very simple, is, are you able to solve a problem, right? And in our space, in agro-processing currently, we're looking at solving a problem on both affordability and nutrition with where we operate. And Zambia is still fairly heavily import dependent, but we have a lot of opportunity for local value addition. And I think that's where my previous work life gave me exposure to, right? How do you invest in manufacturing? So for us right now, when we think about the product life cycle, it's not really about following a trend or anything, but it came through understanding what problem are we trying to solve. And then, that allowed us to dive in deeper and learn more about the problem. Let's take Nutrimilk as an example. When we initially conceptualized this, it actually came through one of our customers. It was a very authentic sort of conversation that I was having with them, and they said, "Hey, Gaurav, why don't you guys make soy milk?" Right? And then this customer of mine, of our sort, spent some time in West Africa, and said, but you're already doing all these soy products and these meat alternatives. And it led to just understanding that, yes, we can do it. What's the technology that's required? What problems will we solve? And as we tried to understand what problems we'll solve, we learned more and more about, lactose intolerance. We learned more about dairy prices and the gaps in the dairy value chain in Zambia. The infrastructure challenges that exist that don't allow for the dairy consumption per capita to be at levels which are at average or above average for the African continent, right? So that's where we thought that, okay, I think we have a business case here. Let's invest more time to look at the operational capability, capacity, infrastructure that we need, technology that we need to invest into, rather than making a fresh soy milk product, which we initially started with and realized very quickly that it was going to fail because of the infrastructure that's unavailable or not as strong when it comes to, the cold chain distribution. So then we said, okay, now we have to invest in UHT technology to make sure it's shelf stable for a consumer, 800 kilometers away in Mbala, as an example, right? So how do we make it relevant to that consumer? How do we transport it? How do we pack it? I think as we understood one problem that, there's an opportunity here, we learned more about the problems, and that just justified the business case.
If you're enjoying this episode, take a second to like, share, and subscribe. It helps us reach more people and keep these conversations going. Thanks for your support.
Russ.
I would like us to talk about the investments bit, but I just realized for some of our audiences outside Zambia who might not understand the full context of how big 26 Brands is, could you maybe just give us an idea of the size of operation that you currently have? This could be from farmers maybe that you serve, the number of customers, or a revenue point of view, so that they have context around the business.
Sure. Well, firstly, I personally don't think we're that big, right? And I think that sort of benchmarking comes from, although I don't like to benchmark, but that perspective comes from working in three of the largest economies in the world, right? India, China, and the US. So when I look at Zambia, my perception is always that we're a village of 20 million people. And the opportunities, and I speak about this a lot across various conferences, is, I think of Zambia as a city. And potential obtainable market is roughly 600 million people, which is about 40+% of Africa's population, covering 14 countries from Ethiopia down to South Africa. So when I think about, all right, what opportunity do we have to tap into? We're still very small from that perspective. But as an organization, we directly work with, have worked with over 9,000 farmers till date in the last 8 years. Narrowed it down to working with just about 2,000 farmers on the organic certification program, which is a very specialized, focused sort of outgrow program that we manage, and takes a few years to get your organic certifications both on field and your factory. As a factory and operation here, we have 3 factories with storage, which by the end of the year will exceed 30,000 metric tons, a staff complement of just over 750 people. So yeah, that's what we do. So storage of 30,000 metric tons. We're processing it. We also have invested heavily on distribution. So we have a fleet of over 100 vehicles that we use for distribution of our products within Zambia. And then, of course, partners that we work with across the continent. Tapped into Ethiopia, tapped into South Africa, currently available in Botswana, Tanzania, and soon Malawi as well, I think, very early next year. So yeah.
And has that always been the core focus? I like a story, and I love the ambition for when you picture the market, right? Which is not just the Zambian market itself. Has that always been the vision to be operating at that scale, or is it something that came with you as you entered the business as well?
I think it came with me as I entered the business. So the business itself, I like to think, has had very strong foundations that have allowed us to think, there's 3 phases I like to think of business cycles. You have 0 to 100, 100 to 1,000, 1,000 to 1,000,000. So the 0 to 100 is equally important, right? You're going through tough times to make sure that you're able to set strong foundations. Not as process driven, right? There's less structure. And then from 100 to 1,000, you want to bring in more processes, professional systems, and bring more structure. So I think that came in with me after seeing a little bit of the world to help us realize what real potential we can add by taking it to these markets and investing in additional capabilities. So that's where a lot of the investments were driven into. How do we reach this opportunity, not just in Zambia, but the region and the global stage at large?
Makes sense. And I'm trying now to imagine, with you coming into the business with so much innovation, you're thinking forward and thinking and looking towards the future. Uh, what was the hardest part of you integrating into the business? Because I would like to imagine you had people that had a way of thinking, they had a way of operating. But what was the hardest part, and how did you navigate that particular challenge?
Yeah, I think working with my old man, a very close friend of mine, and my boss and the chairman and visionary as well, I must say. I think it's really hats off to him because not a lot of families accept the next generation coming in and accepting their ideas. So I think the hardest part transitioning in, and even till date, is debating and fighting. At the end of the day, hopefully uniting. With my old man. So I think that's been a big challenge. And I must say the change management, which is almost constant when you're scaling, right? Processes evolve, people evolve, aspirations change. You have to pivot in economies like Zambia when you have the macros that don't work for you. So I think the hardest part has just been, navigating change management across both macros and internal cultural changes that we're trying to bring in. But yeah, it's hard but fun. I think you need to enjoy that journey as well. It's definitely a lot of pressure at times, very little stress because you enjoy it along the way. And yeah, just fortunate enough to have my old man also accept certain new innovations and ideas, and then taking risks, which he wouldn't naturally do or take. I guess because he'd probably taken the chunk of risks that he had to take between 0 to 100, right? So yeah.
Yeah. And I'm curious if change management for a traditional business would be different for a family business, because you're almost going through the same process, right? Where you are thinking of changing people's perceptions, changing their ways of doing stuff. Yeah. With your experience working in almost like both businesses with you right now in a family business, has that process been any different, or do you see any similarity?
I can't really compare with a more structured, large-scale elephant compared to us as a gazelle, to be honest, because I was too junior in that organization to really understand change management. I mean, you'd see leadership changes, you'd see, corporate politics and corporate changes with mergers and acquisitions, but I was not really exposed to a lot of it back then. So can't really compare. But yeah, I think for us, I compare us to ourselves, where we were last year and the years before and 5 years before and 10 years before, right? So I think for me, it's really that comparison, looking at the change and the evolution that's taking place in the business. And yeah, it's not that easy. I mean, now you get, degrees in change management. So it's learning on the go rather than just academic theory and learning. It's about learning, implementing, and introspecting along the way.
And when I do my research, I think I've done some research just around family-owned businesses, right? The failure rate is quite high for generational businesses. And I think I like the fact that you've pointed to the aspect of acceptance, which has happened, and you're still working towards the change of leading the company. Right now, how has your relationship changed with the old man, especially moving from just son to now like a successor or almost like a business partner?
It's brought us a lot closer together, to be honest, because we spend a lot of time talking about changes, spend a lot of time thinking 5 to 10 years ahead. We spend a lot of time debating on perspectives that come through a lot of wisdom on his side, and naturally a lot of risk that I would probably present on my side, right? But yeah, there's a very cordial relationship, which is both informal and formal, which is very, very healthy, and I think has been helpful for us as we navigate the changes.
And for some entrepreneurs that we have that might be listening, where you have maybe a wife as part of the company, basically running a similar family business, how do you separate family politics and dynamics from boardroom decisions? What does that look like, and how does that happen?
Oh, wow. So my wife, she's a blessing. I mean, she's my rock. She allows me to 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 strive with the aspirations we have, and she owns it as well, knowing that it's not just mine, it's also hers, right? So I think there's an aspect of, she knows that it's engraved into our family life. It's hard to separate, right? I get asked sometimes, what's work-life balance? And I always like to say, I think it's like work-life harmony, right? How can you be on vacation while you're supposed to be switched off, but you're allowed to take a couple of hours to work while still having a beer and swimming with the kids, right? So
Tell me about that.
I think, yeah, no, that'll be an offline conversation. But yeah, there's a lot of understanding. I probably need to do a better job. I think there's a lot more sacrifice on her end than mine, but not correlated to boardroom decisions. To be honest, there's a lot of consultation to make sure that she's keeping things in check. Because anyone who's sitting in a chair like this compromises a lot when it comes to just loneliness or your health. There's a lot of things. So you need someone to help you keep them in check. And I think my rock sort of allows me to bounce back off and on with her, to make sure that, she's equally a part of the journey. So there's less discussion about what's in the business, but discussions more about working on the business. So those are the sort of discussions really. And she's far more of a successful professional than I am, or at least up until we got married and she moved back home with me. So I think as a finance professional, she has a very good understanding and appreciation of the world, scaling, and business environments.
And talking about finance, I'd like to just circle back on the investment side as well. I think you spoke to the aspect of the significant investments that you've made in Nutri-Milk. By the way, great job on the innovations that you're pushing there for the region itself and the continent. But when we think about it, really, raising capital in our markets is not easy, especially you being a Zambian registered business, right? What has your investment journey looked like from fundraising to the investments that you've made in the business?
So we started off with short-term, external financing needs in the business. Very recently, I'd say in the last 5 years. And that was interesting because as a non-finance professional, to be able to raise capital externally, there was a lot of learning that we had to do. And I wish I had generated AI to help me 5 years ago. I may have made better decisions. But that was, a journey along the way that we learned through. And yeah, those 12-month working capital facilities then led to the big decisions, right? And that was bringing on Norfund, which is a DFI on board into the business. We're very proud of having such great partners as well, because that enabled us to leap forward on the innovation. So the investments really came into capability, right? So we're not looking at just products that we've invested in or machines, but real capability, which encompasses both manufacturing, quality, systems, supply chains. And that's super important for us because it's more long term, right? It's required for markets like ours in Zambia, where contract manufacturing is not as easy or as available compared to more developed markets, where if you have a product, you can co-pack it with someone because there's manufacturing capability. So in Zambia, that was difficult. And even investing in this opportunity, we explored that and realized that, the cost profiles of the products wouldn't make sense and we wouldn't be able to achieve the goal that we'd set out if we had to get this co-packed. So we had no choice but to invest in, these capabilities of local manufacturing. And when you're navigating, trying to solve a problem, you'll hit across a lot, and raising finance was one of those as well. And in hindsight, sometimes I don't even know how we did it. I knocked on a lot of doors to support us to believe in the vision, and some close, which is good because they teach you something as you move on to raise from the next. And that enabled us to partner up with Norfund and give them assurance and confidence on what we're trying to achieve, and just articulate the vision that aligns with like-minded investors. So that's how things started, and it's been ongoing since then, right? So when you scale, you need more oxygen into the business, which is capital, to make sure that your cash flows in check, your asset utilization is monitored as well, and then also supported through better ESG practices and better governance. So investments that were made in capability have also allowed us the opportunity to develop and progress and learn as we continue to scale.
Hmm. Uh, and you see in our ecosystem right now, across the continent, in fact, across the world, everybody's like, hey, tech, AI, I don't know what cool stuff, what else is there, right? Um, and many people are looking to it, right? They are neglecting thinking around actual physical products that serve either low income, middle income, or even high income customer segments. How have you managed to navigate this space or even stay relevant in a space where we have technology evolving on a daily basis?
You can't really ignore the technology that's exponentially growing as well, right? But in our space, we're very product focused, right? Investing in creating products and building brands that are solving problems. The idea of tech is complementary to what we do, right? And using AI on its own has proved to solve a lot of solutions for us, save time in terms of how we operate, and just integrating tech. So, I mean, just a simple example to those young entrepreneurs or entrepreneurs who are starting off. When I joined, I remember like our entire supply chain and operation planning and inventory management and material planning was all done in Excel. And as a supply chain professional myself, I realized that, look, we need to have an integrated enterprise resource planning system and a software that supports this, that allows us to make better data-driven decisions and give you business intelligence and insights to make sure that you're scalable. So I think embracing tech is important. Um, and I think it's necessary today to stay ahead of the curve. So even if you're in products and manufacturing, I think the ability to use AI and generative AI is tremendously powerful if the prompt engineering is understood properly. So yeah, you have to embrace it along the way.
Mm. And so investment in technology, new products coming on board, we're exploring new customer segments, right? What have you decided to preserve from your father's era? And what have you decided to change as you look to move forward with the business?
Preserving from my father's era. I think preservation of cash flow. I think that's important. Understanding that cash is king. Understanding that what's in your bank at the end of the day is very important. Expertise and focus on treasury management is so important, and I think that's an ultimate to making sure that there's efficiency. And then there's also an aspect of when systems don't work, pick up the phone and call, just get things done. I mean, you can design processes as much as you'd like to, but ultimately 9 out of 10 times you're working with humans, right? So there's an interaction, there's a relationship. How do you push forward? And you have to push. That's one thing that I really learned from him. I mean, if you don't push, you can complain all you want that something didn't happen because there was a gap in the process and you just sound like a broken tape recorder, or you just get the job done. So he's a man of action and achiever. And I think that's something that resonates a lot with my personality as well, which I've probably inherited from him, which I hope is a good thing for the business. But it comes with catching a lot of people off along the way because your anxiety levels are at a peak, right? But it's important. And in Africa, you have to push, right? Or at least in Zambia, you have to push.
And what have you decided to change?
So the balance of bringing in processes, systems, and professionals, I think that's very important because you realize that you can be the bottleneck to break the entire system if you don't allow for knowledge sharing, if you don't allow for processes being there, because the business is bigger than us as individuals or even as a family for that matter, right? I mean, we like to think that with the hundreds of people that we employ directly and indirectly, there's thousands more out there who are depending on their livelihoods because of 260 brands, right? Both on the farmer side and those that are employed by us and their families. So I think the changes have come through with building more processes, investing in systems, investing in technology, and bringing in a fantastic team who are super smart in their own areas of expertise. And I think that is where the change is coming. So, trying to be a little more open towards respecting a diverse group to come in and complement the growth story and speak to the growth story.
And I would like to believe it's those systems that have now enabled you to distribute beyond Zambia, right? I think now you're in markets like DRC, Botswana, Ethiopia, should be in South Africa and Malawi, correct?
We were in South Africa as well.
Me there.
Yeah. No, we were in South Africa. We have exports in Malawi, Uganda in the past as well. But yeah, I think systems are always evolving, right? Systems are always evolving. We're always challenging our own status quo as we grow and scale.
Yeah. And what could you run us through what that experience looks like, especially for entrepreneurs? Right now, I think we talked about this. With just about a population of 20 million, what now makes Zambia a lot more attractive is its positioning as a landlocked country and its neighbors that we have around, right? That bigger population creates more opportunity for product distribution and integration into other customer segments. What does that process look like for expanding into the region, right? Like, what does it really take for someone who's thinking around expanding to those regions as well?
Yeah, I mean, so you touched on it correctly. I think, there's aspects of being humble and working with humility because a lot of our markets, neighboring markets, are very different from languages, legislations, logistics that we need to work around. So I think it's really about focusing on strong partnerships, understanding that we might have an end-to-end value chain that we're strong in Zambia, but that may not reflect in, let's say TRC or Botswana for that matter. So I think here it's about balancing both speed and ensuring that the fundamentals are correct. Unit economics becomes very important, right? Because to enable your products to succeed in these regional markets, you have to work backwards from the price that the consumer would pay. And then you add in every part of the value chain and the associated costs to ensure that, yes, you can still remain relevant and competitive to what's locally available there. So I think understanding unit economics has been very critical and very important for any product that's looking to scale. Services, tech, AI becomes a lot easier because you're running off the worldwide web for that matter. But I think from a product perspective, you have to factor in what's probably the biggest cost in everything, which is, the logistics cost, which really adds up on top of your actual product cost itself.
And is that the same? Because I think, again, now that you speak to unit economics, I see why you've picked up on the old man as well when it comes to preserving your cash reserves. Because ultimately, that's what it's coming to, is we have to make money on the unit economics so that we are a sustainable business, correct? And so when you now start thinking around the entire supply chain or infrastructure around your business, I think you spoke to the aspect of, hey, other markets have got a packer who can pack products for you. What other aspects of infrastructure are lacking right now and along the supply chain? And what lessons have you learned over time that have helped 260 brands to stay competitive and scalable?
So when we look at the markets outside of Zambia, I think disruptions aren't really occasional. They're part of our daily life. And with the different legislations that come in, it's about learning about these things that I can say make it complex, because if you get into, let's say, a market which has lower purchasing power or appetite in terms of market share for the categories that we're exporting, you still have to go through this same learning curve of understanding legislation and doing the entire research on the value chain, on the policies. So that becomes very different. So, but then you start designing systems and expect the volatility and keep in the buffer to make sure that you can handle this, right? It could be forex availability in a market which you can't really easily receive, on an outstanding debt that's there. It could be on flexibility that you need with the people that you're working with in these markets as well, by understanding the local cultures and the local habits. So you still have a global mindset, but you're operating locally, if I can put it that way, So you have a vision, you know what you need for the brand, but adapting to rather the local nuances. Yeah.
If you are enjoying this episode, take a second to like, share, and subscribe. It helps us to reach more people and keep these conversations going. Thank you for your support.
And I think while you're speaking, there's something I'd like to double click on. When I mentioned a few countries, I think you talked about Uganda. In the past, you were in Uganda and South Africa, correct? Have you put out from those markets? And what really happened, or what insights did you get that made you pull out from those particular markets?
Sure. So I'll talk about South Africa. I think it's a little more exciting. I think for South Africa, we put product there and we learned that we need a little more innovation in terms of the spread, because there are a lot of loyal and strong brands in those markets that consumers have been working with and consuming for many, many years. So to look at that change of behavior, to switch to an alternative, really requires a more compelling story. At the same time, when we look at, soy milk as one category that we've started recently, we realize, that the trends and appreciation for soy in a market like South Africa varies a lot from Zambia as well. So again, it's about looking at, all right, what else do we need to do to get into that market? So these lessons are very important for us as we pivot, re-strategize, which are part of this innovation journey, right? In terms of what can we do that will make us more successful if we have to get back into South Africa. So we haven't, lifted off the foot on the pedal. The plan is still there, but it's about working through the re-strategizing aspects of the product portfolio that will enable us to succeed, supported by very strong marketing to get into.
And what has been a failure? Because I mean, there's so much that you're doing right now, so many products that we have in the market, right? And I would like to believe there has been some failures, right? Some failures will make it, maybe they'll make it in the headlines. But what has been a failure that didn't make it in the headline, or failures that have shaped you deeply as you lead the company and organization?
Wow, many failures. If I have to be completely vulnerable, lots and lots of failures. But maybe I'll speak about two failures. One is on the products, which is probably obvious and expected from this podcast, where you launch a product and then you realize that you didn't succeed. And the lessons learned are usually, hey, did we do enough research before we launched the product? We're very good in setting up a plan and working towards it and launching the products, but little insights that we may have missed might have really caused this entire failure. So we've had a few instances of those. And the second, I think, opportunity that we've learned from has been, or I've learned from, is people, right? When you're scaling, you realize more and more that bringing in people and today I realize it's the most important part of our business. Actually, it's the most important thing, the team, the people. And I think in the past we've been, and I hate to say this publicly, but the reality for those listening is, I guess you hire quickly and you take your time to fire as well, or let go, or you mutually separate, or wherever it may be. But I think it should be the opposite. And I'm learning this more and more, to take more time on recruiting people and making sure that the onboarding process is stronger and stronger, right? People need to be inspired to be able to continue to stay. And that requires an enormous amount of communication, or effective communication, through the entire journey for them to stay longer and to have the autonomy they need to lead independently without constantly looking for decisions. So finding the right people has been a great lesson learned. And some stay, some leave for whatever reasons. And it's part of the journey. And you realize that, look, there's certain decisions. If things are not working, make a decision quick, cut off, move on. But learn from it to make sure you're building the right team. So I think a lot of focus now is on people, right down to an operator who's operating a machine. What can we do to enable him or her to keep the big picture in mind and understand the purpose of why we're doing what we're doing? Because there's easier ways to make money, I'll be honest with you, than operating in agro-processing manufacturing environments in a country with up to 20 hours of load shedding. So there's a lot more easier ways to make money. But yeah, I think it's the purpose that keeps the fire going, and making sure that the people understand this as well. So no failure is too big or too small. They're all relevant. And I strongly believe that they're provided at the right time to enable us to learn from and fix along the way.
Thanks for that. Very insightful and brilliant. And while you talked about that, I was just constantly thinking about the other stakeholders involved in the business that are quite key, right? The local communities in which you sell your products, and the small scale farmers, I like to believe, are a huge part of your business. I think you did mention that you work to date close to about 9,000 farmers. What are some, in addition to that, I'd like you to speak about some of the initiatives that you're most proud of, that particular cater for this particular stakeholders that the business gets to impact?
So yeah, I think on the community side, most proud of our team that's really worked with the farmers who have been certified organic. I think that's something that I'm really proud of. And we just received that certification a few months ago, because we started this journey 3 years ago for the first cohort that were compliant on the organic systems and plans over the years. Thank you. So yeah, I think that's been a big success. It was in the hundreds that actually got certified out of the thousands that we worked with, right? But even if it was one, It goes to show that our team on the ground who really putting in an enormous amount of effort, during distribution of seed, and the teams that are going constantly to the farms to train them and work with them through the post-harvest process, work with them to, ensure that, everything is organized and consolidated and procured and timely paid and transported back to our factory. I think on the community and farmer side, that's something that I'm most proud of. And also embarrassed at the same time to say that as much as I think about this a lot and work on it, I don't work in it. And that's something that I probably need to change, because I feel like I don't get enough time to get out to the field and engage with these farmers. But we have a solid team that's actually constantly working with these farmers, and we're really proud of that.
And does anything change when we have organic certified farmers? Does their income or how much you buy their seed change? Like, what does that look like?
Absolutely. So for the farmer, I mean, that's probably the biggest benefit for them right away, because even in this 3-year certification program, before they even get certified, they receive a premium compared to what the market average is. So the farmers benefit straight up. They're provided with interest-free input financing, which also reduces the risk for the farmers. And yeah, they get that premium. But essentially, I guess, when this is scaled to the level we foresee it to scale up to, the farmers are constantly getting an above market average price. And they're part of a global supply chain, right? If you're taking an organic certified product made in Zambia through locally sourced Zambian soybean and charging the premium to the consumer in South Africa or Ethiopia, I mean, everyone in the value chain, all stakeholders are benefiting. So I think it's the system that's being built around this and all the communities and stakeholders through responsible growing that leverage and benefit from this impact that's created, which almost comes naturally with every stakeholder that's working in this value chain. So it's massive for the farmers, and very scalable. And I think that's the opportunity we see in Zambia, not just on the soy side, but various other, agricultural produce that can be scaled.
So on one side, cash is king. We have to respect the cash that we have in the bank. The other side is unit economics. We have to make a positive return on every dollar that we invest in products, right? And we have the third piece, which is impact, right? How do you balance trying to make a profit and really stay committed to the soul of the company, which is making a positive impact in the communities you operate and the lives of the farmers?
How do you balance? So for us as an institution, I mean, something we started last year or earlier this year, sorry, was building what we call a weighted average RACI matrix, or which incorporates KRAs, KPIs, which encompass every facet of our organization, and that allows teams and individuals to hopefully stay in check, right? Because as my job as CEO, both impact and shareholder value are equally important, right? But you cannot create impact at the cost of shareholder value. It's not sustainable. And I interned at this organization once, and I took a very interesting piece of advice from one of their senior execs, and they were basically running a CSR impactful program in which the local communities were growing some crops and they were buying it from them, and they were creating the finished products to use in their canteens. And the exec told me, Gaurav, the CSR project is a business model. It's very clear. If it's not profitable, it's not scalable. So there's impact, but it's sustainable. So it's not like, giving someone something for free once and it works. It has to be in rotation. So I think the balance comes in with also educating farmers that, yes, we're giving you interest-free inputs, but this is a business. You can't just think of it as aid in the long run. Otherwise, it's not sustainable. It's not scalable. And I think the balance for us is also equally important, right? I mean, yes, we'll pay a premium, but we'll always keep in mind that will this justify the finished end product that will enable us to also remain profitable, to reinvest back into this program to ensure that the farmers and the impact that we're creating is sustainable. So I think, again, unit economics, social alignment, engineering, whatever you want to call it, I think all those things start fitting into one puzzle together. So like the RACI matrix I'm talking about is I think about 77 KPIs we have. I've had coaches who tell me like, oh, Gaurav, that's too much. I'm like, look, I might have one or two, but it has to be drilled down. It has to be drilled down right to the bottom level. And I think it holds people accountable, creates a a culture through a lot of change management or performance management as well. But I think that's where the mix comes in. So that has impact related, results that we need to focus on, that also has financial related results that we need to focus on, amongst other things. So that's the approach we use.
And I
Yeah.
like that you bring that up, because for the agriculture sector, I mean, I've done some development work there and worked on projects working with small scale farmers, right? And you will see that NGOs that are usually working in this space, like, because of how much they give the farmers are constantly expecting freebies, right? Give us free seed, pay us to attend a workshop, give us a transport refund to go back home. And so I like the aspect that you mentioned, like at the end of the day, it's re-emphasizing and mentioning, reinforcing that this is a business, and we will pay a premium, but it has to make business sense. How do you deal with activity where you make investments in farmers, but yet they go to sell the seed to a different, competitor? Like what does that look like for you? And how have you been able to manage that?
Yeah. Default is very prevalent, I'd say, and maybe we need to learn a lot from that journey. But yeah, default is there. I speak to other organizations and institutions that run outgrow schemes, and the side selling business happens. Yeah, unfortunately, those are hits you just end up taking. It's something you write off in your books. It's painful for me, for the organization, for our shareholders. But it's constant lessons learned to say, how do you do it better year on year? And what sort of better controls do you put in place, and how do you use tech, if need be, to better monitor and reduce that delta inside selling, if you want to call it, year on year. So yeah, it's painful. That's all I can say. It's painful. But that's where I think, when we initially started our first outgrow scheme about 9 years ago, we were into the conventional soy value chain. And at that point, our default rate was substantial. I don't remember, but definitely double digit. And we realized that it's inevitable for us to close that gap, because policy at the macro level also impacts the farmers. Non-compliance, if I want to put it that way, or non-adherence to the contracts and agreements we have to side sell, right? But when we get into this organic value chain, I think you see that the systems and plans you have in place somehow protect us better with the rates that we offer, to allow it to be more sustainable and scalable. Yeah. Yeah.
What scares you about the future, and what excites you just as much when you look forward to where you're going with the business?
So what scares me and excites me is probably the ambiguity when launching new products. You're learning through an iterative process by getting more insights and stuff, but you can never have it perfect, right? You look at brands like Coca-Cola who launch products and fail, and you wonder, like, with an institution and a mammoth size that they are, how can they fail? Right? It's part of it. So I think there's an aspect of that ambiguity when we're launching, especially in new markets, to see, how will it work? And you can do all the research and get research houses and stuff and do it, but it's all pen and paper. I strongly believe, put product in the market and learn. So that's something that scares me a little bit. But I think more so it's policy, changing policy and fluctuations. And it's a challenge a lot of us in Africa face, whether in West, East, or Southern Africa, consistency around policy or exchange rate controls. We're operating in value chains like maize and soya, which are, very political commodities. So those things somewhat scare me to think, is this sustainable? But yeah, I think it's still exciting, because I think the core purpose of solving affordable nutrition still stands, right? People still have to eat, people still have to drink. I'm not making luxury cars, that I have to worry about in 260 brand. So I think for us, it's really about um, taking this approach. But yeah, I mean, there's high risk, high reward. It's you have to penetrate the unknown. Otherwise, if you become too comfortable in your space because you think you're happy and you're doing everything that you can be, someone will take your space very quickly. Because yeah, if it was easy, everyone would do it. So yeah, you have to be scared. It's important. You have to feel uncomfortable. You have to feel
Absolutely. And
uncomfortable.
I think that's what excites us about business. Just that ambiguity, like you said. You don't know what will work. Some might stick, some products might stick, some might not. I was actually having drinks with a few friends of mine, and we're talking about Coca-Cola. Like, did the Coca-Cola founder ever think Coca-Cola will be a mixer, right? Like, people use it as a mixer for strong drinks. Like, yeah, that's about product innovation and product development. And that's how it goes. But thank you so much, Gaurav, for your time and sharing all of these insights with our listeners. It was just such an enjoyable conversation. I just realized we went over time, but really, I've learned so much myself, and I hope our viewers find as much insights from this particular conversation. My last question will, where can they find you and how can they learn more about 260 Brands?
Thanks, Kabbalah. I mean, so firstly, it was an absolute pleasure speaking with you, and thank you for taking the time to learn more about us and our story. It's a long journey ahead, so it's exciting for us to be followed or to learn on. I think our team does a fantastic job on various social media platforms: Facebook, Instagram, I believe TikTok. I'm on neither of these. I'm not sure, but I know we're very, very active on these platforms, LinkedIn. But yeah, it's there's multiple ways to reach us. Our phone numbers are mentioned on every product and packet we produce and sell out there. So, WhatsApp us, email us, reach out to our teams and merchandisers of the trade. And would love to also collaborate with other people out there who feel like there's synergies in which we can collaborate, we can support, and incorporate in this global supply chain. So yeah, I think social media these days is probably the easiest for people to reach out to and connect with us and follow us.
Perfect. Thank you so much, Gaurav. And to our viewers, our audience, I hope you enjoyed this conversation just as much as I have enjoyed it. So we'll see you in the next episode, and thanks for watching.
Thanks, Kabbalah.
Thank you for joining us on Beyond the Pivot. Remember to subscribe, follow, and share this episode with anyone passionate about Africa's future in business. For more stories and extra resources, visit tambotiseko.com. Until next time, keep pushing boundaries and shaping the future of African entrepreneurship.